fears of inflation and interest rates rising much higher, and that has hurt the multiples, the PE ratios, valuations of these companies. I have a point of view, or we have a point of view on inflation and interest rates, but we think this has been way overdone. And it is interesting that actually just since COVID, we've seen the correlation between Bitcoin, crypto generally, and the NASDAQ. It's increased quite dramatically. Prior to that, very little correlation. Yeah. But as you said, Bitcoin has outperformed many of the innovation stocks out there. I think that's a really good sign. I think it's a huge competitive advantage for them. I remember with my own IRA, I was trying with just GBTC to get it transferred, and then also underlying Bitcoin, and nope, wouldn't. And no one wanted to provide the custody. So this is a breakthrough for crypto in the retirement asset world. Well, I do think that Fidelity has basically it's open sea competition now. So I think they're going to be forced into this. To some extent, I mean, sure, at the margins, this is retirement accounts at Fidelity, as Mike said, a certain demographic and so forth, but not really the demographic that is moving rapidly into this world. In 2018, they wrote a report to their institution saying, you may not like this, but it is a new asset class, and you have to make a decision one way or the other. So that was a little bit of a booster. But then many institutions are looking at the regulatory environment and saying, well, okay, that's not clear yet. I don't think we can take this risk. So, once we get clarity, more clarity, and I do think the President's executive order is important, getting everyone in gear. And I think really important is Janet Yellen, Secretary of the Treasury. A year ago, I was asked, probably on CNBC, why she why she was so down on crypto, the environmental, the illicit activity, and so forth. She had nothing positive to say. 1 year later, the president and I'm wondering, okay, someone's whispering in their ear. And I think, the difference, one of the differences is, and now this is a Democrat, Senator Wyden, he's embracing crypto because it's a new technology first. Whereas you'll have others on the more progressive side who are not, because they're thinking from a financial services point of view, and they have certain constituencies there. So I think those who are thinking technology first, we cannot lose this competition globally. The U.S. needs to be at the bleeding edge. People feel safe with them. It's a familiar wrapper for a fund. And it's a good wrapper too, in that you've got the liquidity, the tax effectiveness, the transparency, and so it's a really good wrapper. The last year has been murderous for innovation stocks. And it's because of fears of inflation and interest rates rising much higher. And that has hurt the multiples, the PE ratios, valuations of these companies. I have a point of view, or we have a point of view on inflation and interest rates, but we think this has been way overdone. And it is interesting that actually just since COVID, we've seen the correlation between Bitcoin, crypto generally, and the NASDAQ. It's increased quite dramatically. Prior to that, very little correlation. Yeah. But as you said, 14 million out of the 19 million Bitcoin out there have not traded in more than 6 months. We've got a lot more hodlers out there, I think, than people appreciate. Yeah. One of the reasons. I've said this before, but I think it's so important. Bitcoin, yes, the populist movement, but it is also a new monetary system. It is the first global big idea. Private, meaning not oversight by a government. Digital, rules-based monetary system. I think it's a profound idea, and more people around the world are beginning to appreciate it as they're seeing their currencies fall apart with the dollar strong. This hits emerging markets usually hardest.
Yeah.
You will find the building blocks of this in our Big Ideas 2022 presentation. It's on our site, arc-invest.com. But the largest the largest component of that is we do believe that Bitcoin will usurp 50% of gold's role. This is digital gold. So that's roughly a $5 trillion opportunity right there. So the smallest one is remittances. We think that it will take most of the remittance market. The remittance market is a $600 billion market. We have insurance policies, high net worth individuals watching, confiscation of wealth.
Right.
And with all the turmoil in emerging markets and elsewhere, the Middle East, who knew that MBS was going to take his cousin's wealth away? So don't they wish they had some Bitcoin and private keys? So also companies allocating some of their cash or diversifying some of their cash into Bitcoin. We've seen Tesla do that, Coinbase, Square, of course, MicroStrategy, and you're going to see some countries putting Bitcoin into their treasury.
Right.
We assume only 1%. So if you look at the building blocks, and then finally institutional, how much will institutional investors account for this? Well, we assume that institutional investors will put 2.5% of their allocation to Bitcoin. And that isn't even as big as the global digital gold opportunity. It is a new asset class, and it is the leader of the new asset class. And so I don't think it will be going up immediately because of a breakdown in our economic prospects. And I also think that all of the technology, I'm going to take the other side of this bet, I think the technology revolution, and it's not just blockchain technology, it's genomic sequencing, robotics, energy storage, artificial intelligence. All of them are highly deflationary, and all of them will be very destructive to the traditional world order, but they will present massive opportunities for growth. So I feel as though it's going to feel chaotic like it does now, deflationary world. And it will be very good for some companies. They will boom. You lower prices, you get more demand. But other legacy industries are going to be sitting there with stranded assets. And there's going to be, again, a lot of confusion about what's going on, as there is today.